Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence.
Swap traders have further reduced bets on Federal Reserve rate cuts for the remaining meetings this year. This shift follows robust US retail sales data in September that exceeded expectations, coupled with strong job data and higher than anticipated inflation figures earlier this month. The consensus is building that the US is far from entering a recession. Across the Atlantic, traders are increasing bets that the European Central Bank will implement a substantial interest rate cut in December after policymakers flagged growth risks and lowered the borrowing cost on Thursday. The ECB cut rates for the second consecutive meeting, reducing the key deposit rate by a quarter point to 3.25% as widely expected. Good morning, JK. How are you reading yesterday's data and the policy action?
Good morning, Swaraj. Yes, yesterday there was a lot for the dollar to take cues from, and of course, US data and the ECB actions. These are the main factors. On ECB, of course, the point of a cut was well expected, uh, but their forward guidance still hinted at a data-dependent approach. Although the market now expects ECB to at least match Fed in terms of rate cuts. ECB president said what is clear to all is that we all have risks on both sides of our forecast, upside and downside, probably a bit more on one than the other. So basically, it's not probably more downside risk than upside risk, what she's saying. That's as far as the growth is concerned. Inflation is expected to rise in coming months before declining to the target in next year. So this does not really give any idea to me how they are, projecting the upcoming policy moves. But anyway, for the record, this is the first time in the last, 13 years that the ECB has cut rates in two consecutive meetings. So now we are down, almost 0.75% from the peak. And I definitely there is going to be another move in December. Euro took it on the chin, despite the fact that it was discounted. We made a low of 1.0810, where a lot of support comes on the technical charts. We've been bouncing from around those levels. Uh, Wait for more data from Europe because we had seen some green shoots in the recent past. Onto US data, I think one of those days when that every data from US was strong, helping dollar index to scale a new 2.5 year high at 103.87. Initial claims came at 2,41,000 versus 2,60,000 expected, and this drop has happened despite two big hurricanes that have hit, and there was some strike in Boeing also. These have not raised the claims. It was of course higher last week, but started to come down, which means the job situation is not as bad as one thought. The retail sales came at 0.4% versus 0.3% expected. But the control group, where the retail sales excluding transportation, etc., was the one which, market considered as important. 0.7% increase month on month, and that was very strong because the control group also is taken into account in GDP calculations. So overall, the US consumers continue to spend strongly, and that will definitely lead to GDP being strong as well. So the differentiation of US better than other regions is continuing. That supported the yields to spike up. 10-year yield went up to 4.10, and the 2-year also went up to 4.02, although slightly drifted lower after that. So the dollar index hit 103.87, where there's quite a bit of strong resistance for it to go further from there. Uh, to mention a couple of technical points. It's 61.8 Fibonacci resistance for the dollar there. Normally, we see a retracement from those levels, and also it's a 200-day moving average. So these 2 points, even if dollar has to continue upwards, from here it can be only after some consolidation is what I expect. On further data, we had data from Japan where the inflation was slightly cooler. So the dollar yen, which was trading above 150, has continued to hover around there, although exporter selling from Japan is good at those levels. GBP broke 1.30 after the UK inflation numbers came below their target, but not really crashing. No follow-through selling on the GBP is seen. In China, we have seen some data today. GDP, of course, slightly better than expected, although lower than last month. And other numbers like retail sales and industrial production have improved compared to expectation, though although we have not really seen visible impact on the stocks or on the currency as well. So overall, dollar now slowly moving towards what's likely to happen in the US election. Trump gaining some traction and getting lead over Harris as per the recent polls. So market again probably getting into those Trump trades, long dollars and short bonds, possibly because the inflation goes up if the tariffs are imposed. On the rupee, we had a short-lived strength in the INR, which touched 84, but looks like that has become a new base because we saw very good demand despite supplies on account of IPOs. Again, important thing is that we had another big outflow yesterday, almost $850 million of outflow in a single day. Now, what we see is that since 30th of September, we have seen outflow of more than $9.5 billion from FIs. This is one of the largest outflows that we have been mentioning since COVID period of March 2020. Just to have another perspective, if you see the equity alone, in 2023, we had as much as 20 billion of inflows. In 2024, we are already into late October, is just 3.58 billion. But overall inflows have been good because of the bond inflows, with India bonds being included in the global bond index. So definitely foreigners have taken a more sanguine view of the Indian stocks, perhaps not comfortable with these valuations. And now we are actually seeing the impact of the FI selling on the stock market also, because we are seeing Indian equities falling in the last few days, not even gaining traction with global cues. So I think it'll be interesting to see how far this FI selling goes. And so long as that is there, I don't think the USD INR gets any downward play. Of course, 84.10 is continuing to resist. I think RBI will continue to do that. If there is another big spike up in the dollar index, or any global uncertainties, or even the spike up in the US yields, along with FII outflows, then we might see a break of 84.10, and break up that can get to 84.25 in a quick time. Thank you.
Thank you, JK. And quite a bit of outflows for the Indian markets as the hot money flows out. As you mentioned, I think we have seen since October more than $9 billion worth of outflows. Very strong number, and that's also been observed in the Indian equities, which has been falling for the past few days. Now, just quickly summarizing the global market developments. Euro weakened after the policy meeting and bounced after making a low of 1.0810. Forward guidance of the ECB is still data dependent, but markets are expecting ECB to match the cutting rate cut quantum of the Fed. When it comes to US data, every data from the US yesterday was strong. Initial claims, which is how many people are opting for the unemployment benefit, was lower, despite strikes at Boeing and the storms which are there in the US. Retail sales was strong, and in fact, the control group, which strips out the transportation, was also very strong. Just for our viewers, control group is taken in the GDP calculation, so it's a very significant figure. So there is a lot of evidence of the US relative exceptionalism, which is what is driving the dollar. And dollar index hit 103.87. But one thing to remember, these are strong resistance levels for the dollar, and as JK mentioned, we can see some possible consolidation at these levels. Inflation in Japan was also slightly cooler, but yen is trading around the 150 mark. That's it from us today. Thanks for listening. Have a very good weekend, and we'll catch you on Monday with the latest round of financial market updates. Thanks for listening.